Hi everyone, I'm Robert J. Bailey, CPA. Now if you earn tips or work overtime, 2025 just brought you one of the biggest tax changes in years. You've probably heard the slogan, no tax on tips or no tax on overtime. In this video, I'm going to walk you through what that really means, who qualifies, how the phase out works, and exactly where this goes on your 2025 tax return. And as always, my goal is to keep more money in your pocket where it belongs. All right, so let's look at the big picture. What did the new tax law actually do? In July of 2025, Congress passed what's being nicknamed the One Big Beautiful Bill, a large tax package that changed a lot of rules for 2025 through 2028. Two of the headline provisions are no tax on tips and no tax on overtime. But here's the key truth up front. These do not make your tips and overtime completely tax-free. They create federal income tax deductions you can claim when you file your tax return. You still pay Social Security and Medicare tax on those amounts, and likely you pay state income tax on them depending on your state's rules. But at the federal level, you may be able to deduct up to $25,000 of qualified tips per year and up to $12,500 of qualified overtime compensation per person, or $25,000 total on a joint return. These deductions reduce your taxable income, which reduces your federal tax. These provisions are temporary. Right now they apply for tax years 2025 through 2028. Now who qualifies for no tax on tips? Let's start with tips because that's the bigger dollar cap. Under the new law, you can claim the no tax on tips deduction if, number one, you work in an eligible tipped occupation. Now the Treasury and the IRS published a list of some 60 to 70 jobs that customarily and regularly receive tips. And I put a link in the description below so that you can see every job on the list. Now the list includes obvious ones like servers, bartenders, baristas, hairstylists, nail techs, hotel staff, rideshare and delivery drivers. It also includes some less obvious ones like certain personal services, entertainment, and repair trades where tipping is common. Now, number two, you must receive qualified tips. These are voluntary tips from customers. They are paid by cash, debit, credit card, gift card, or through a voluntary tip pool. And you report them to your employer or on your own return. Now, what's not qualified is automatic gratuities that are part of the bill by default. Tips that are really service charges the business controls, and tips in crypto or digital assets are generally not included yet under the current guidance. Now you must have a valid Social Security number, and you can't file married filing separately. Now your income also must be under the phase-out range, which we'll walk through in a moment. Now if you're self-employed in a tipped trade, there's a slightly different rule. You can only deduct tips up to your net income from that tipped business. That makes sense. Now, who qualifies for no tax on overtime? All right, for tax years 25 through 28, the law lets certain workers deduct up to $12,500 of qualified overtime compensation per year, or $25,000 total on a joint return. To qualify, you generally must be an employee covered by the Fair Labor Standards Act overtime rules, usually hourly or non-exempt. Have overtime required by federal law, that is paid for hours over 40 in a week under the FLSA. You must have qualified overtime compensation, which is a very specific piece of your overtime. Now here's the part most people miss. Only the extra half-time portion of time and a half is deductible. So for example, Your regular rate is $20 per hour. Your overtime rate is $30 per hour, which is time and a half. You work 10 overtime hours and get $300 in overtime pay. Only the extra $10 per hour, that's $100, is qualified overtime for this deduction. Now, also important, if you're married, you must file jointly. You cannot file married filing separately in order to get the overtime deduction. And like the tips deduction, you need a valid Social Security number. All right, and you're subject to the same income phase-out rules as the tips deduction. Now, let's get to those phase-outs. Now, both deductions use modified adjusted gross income. Now, the phase-out starting points, tips and overtime, it's single and head of household. The phase-out begins at $150,000 of modified adjusted gross income. That's where the phase-out starts. For married filing jointly, the phase-out doesn't begin until $300,000 of modified adjusted gross income. Now, if you do cross those numbers, you don't lose the deduction all at once. The IRS guidance effectively reduces your maximum deduction by about $100 for every $1,000 your modified adjusted gross income is above the threshold. So that means for a taxpayer who could otherwise claim the full $25,000 tip deduction, it's completely gone around roughly $400,000 of modified adjusted gross income if you're single, and roughly $550,000 of modified adjusted gross income if you're married filing jointly. And again, those same rules apply to the overtime. Now, how do you claim this on a 2025 1040 form and schedules? Where does this go? All right, now starting with the 2025 tax returns, the IRS has created a brand new form. It's Schedule 1A, Additional Deductions. So remember that, Schedule 1A, Additional Deductions. Now this schedule groups 4 new deductions: no tax on tips, no tax on overtime, no tax on car loan interest, and enhanced senior deduction. All right, so let's get through it. First, you're going to report your wages and your tips and overtime as usual. Form 1040, line 1A, still shows your total taxable wages. That includes your tips and overtime, just like before. Your W-2 box 1 also still includes everything. For 2025, most W-2s will not have separate boxes for tips and overtime yet. 2025 is a transition year. So what you're going to do is you're going to use Schedule 1A to calculate the deductions. Part 1 of Schedule 1A walks you through computing the modified adjusted gross income for these rules. Part 2, no tax on tips. You enter your qualified tips and apply any cap. Then apply the phase-out calculation based on your modified adjusted gross income. Part 3 will be no tax on overtime. You enter your qualified overtime compensation. Remember, just the premium portion. And the same idea. You apply the cap, which is $12,500 per person or $25,000 joint. Then the phase-out. Then Schedule 1A totals everything in Part 4. That part adds up to your tips deduction, overtime deduction, car load interest deduction, and senior deduction. That total gets carried over to Form 1040 as a below-the-line deduction, meaning it's subtracted after adjusted gross income to get to your taxable income. All right? So practically, adjusted gross income will still be on line 11 of Form 1040. And the new Schedule 1A total shows up on a line below that and reduces your taxable income. Now, because 2025 is a transition year, many employers won't break out tips and overtime in separate boxes. All right, the IRS is giving employers penalty relief for 1 year while everybody adjusts. That means the burden shifts to workers to have good records. So let's look at the record keeping. For tips, please, your pay stubs showing your reported tips, keep those. Any tracking apps or notebooks that you keep showing your tip income. Now for overtime, your pay statements that clearly show your total hours worked, your overtime work hours, and total overtime pay. All right? So if the pay stub only shows a combined overtime amount, all right, you or your tax preparer can use the reasonable method to take 1/3 of total time and a half to isolate the overtime premium amount. Very easy calculation. So let's give an example. For the tips, let's say Mary's a restaurant worker. In 2025, she reports $20,000 in tips, and her modified adjusted gross income is $60,000, and she's single. Well, in that example, her cap is $25,000 in tips, so her full $20,000 that she earned is deductible. And her income is well below the $150,000 phase out, so she gets to take the full $20,000 tip deduction. So what's that going to mean for Mary? If she's in a 22% tax bracket, that saves her about $4,400 in federal income tax. Now let's go to an overtime worker. James is an hourly worker. His regular rate's $25 per hour. His overtime rate's $37.50. In 2025, he earns $15,000 in overtime pay, all at time and a half. And his modified adjusted gross income is $90,000, and he files single. So remember, only the extra half time is qualified overtime. So on $15,000 of time and a half, his OT premium is 1/3 or $5,000. Now $5,000 is well under the $12,500 cap, and his income is under the phase out. So he can deduct the $5,000, and in a 22% tax bracket, that's going to save him $1,100 in tax. All right, so let's wrap this up, folks. No tax on tips and no tax on overtime are real tax breaks that, together with other tax law changes in 2025, will result, in my opinion, in the highest tax refunds ever this year. Now, they're extremely valuable for servers, bartenders, rideshare drivers, nurses, factory workers, policemen, firemen, anyone whose paycheck depends on tips or overtime. Now, the key is knowing whether you qualify, understanding the income limits, and make sure you claim the deduction correctly on the new Schedule 1A. So if you earn tips or overtime and want to make sure you're not leaving money on the table, talk to a tax professional who understands these new rules. Now, if you found this video helpful, please like, subscribe, and share it with a friend who works in a tipped or overtime heavy job. My name is Robert J. Bailey, CPA, and my channel is dedicated to helping you keep more money in your pocket where it belongs. Thanks for watching, and I'll see you in the next video. Bye-bye.